Hey guys, in this video we are going to cover a couple trades with me drawing in and explaining the Fibonacci extension and retracement tool on both RTX and the QQQ index. And this is from about a month ago, so forgive the time frame. This is from like February 9th or something like that, and it is middle of March now. I just didn't have this video edited, but now I'm bringing it to you guys and it's packed full of value. So without further ado, let's dive into the trades with my student and learn about these amazing tools.
Use TradingView for charts. So basically, I'm just gonna take what you're looking at and then mirror it.
Okay.
There we go. Alright, so you got two screens up on your screen right now.
Yes, I do. The left side is a 1-day chart, and the right side is a 15-minute.
Is that RTX?
Yes, it is.
Alright, alright, so on daily and alright, I'm mirroring that.
Okay, cool. So I'll just clear this set here. Alright. So this is the daily chart. So I kind of look at I'd say a month, just to get a good vibe for the current trend, right? I mean, this is obviously an uptrend, right? And then looking at that, so we've got this is an old all-time high. So I'm just kind of looking back in the past as if this never happened here. Okay, just pretend like this candle just formed here, and then we got this flag formed right here. I'll just outline it for us.
All right. Yeah, so that would be on the 24th of January.
Yes, 24th of January. And I'll just draw in a flag for us. So the triangle, I mean, that's really, that's pretty brutal, but you get the idea. That's kind of the flag here. And then I had seen this as it broke out of this, so it broke out here, and we had gotten in last week. I think it was on this big fat candle here we got on this day, and this was basically with all the strength that was going on, we got in on this trade and rode it for the all-time high breakout, which is obviously still going here. And so the way that I look at the chart to begin with is obviously I want to get that macro view, right? Like what we're doing here. And I'm looking, when this flag had happened, you can see that the TTM squeeze happened. And we were in this, basically we had that downtrend that does happen on TTM squeezes. And it happened during a flagging pattern. And we never even, it went down below for maybe a split second, or for, maybe a little bit. Yeah, it didn't even go down below in the daily. If we want to look at the half a day chart, it did go down below.
Right, I guess you're saying.
Yeah. So it's important to look at different time frames, of course, you already know that. I just wanted to start with that because it's kind of the basis of getting into the Fibonacci's here. I always mark, obviously, this was the high of the day, or the all-time high, sorry. And I would have had this marked before, so I knew exactly where our major resistance was above head.
Right, okay, yeah, that makes sense.
All right. So now for a Fibonacci extension,
Extension meaning price, you're looking for what the brackets are going to be above where the price is, right? Extension above, I'm assuming.
So extension it can be above or below. It's just in a direction. So you can think of, obviously, extension it's pretty easy to remember. That's extended. It's going beyond. And then retracement would be a retracement or a pullback. So Fibonacci extension, Fibonacci retracement. So you're looking for pullbacks or continuations, right?
Okay. All right. Makes sense.
So what I would have done, and I believe I probably did this when I first entered this trade. I don't remember exactly because I just don't have the capacity to remember everything I do. But you know, I would have measured from this low. I use the candle wicks personally. I've found you can really do it either way, where you go from the body, but you have to be consistent if you do that. You go from body to body and wick to wick. You'll find out that it doesn't really matter, because you're never gonna have an exact. I mean, it will happen where you get an exact retracement off of a Fibonacci. It does happen quite often, but it's not like it's always gonna happen, and it doesn't matter because you're just it's a general target, right? So,
right, makes sense.
And you're reading price action as you trade, so you don't need to know exactly where support and resistance is. You know, I mean, it's pretty general, and it helps quite a bit to get a vibe for where it generally is.
Right.
So anyway, so that we draw it in from the bottom, because this isn't a bullish trend, right? We're looking for a long position, and speaking of which, we're up 50% on these now, so draw it in from the bottom to the top of this move. So actually, I could have even drawn this in. I'll go back and do this again to this candle here. You can see how this is the top here. This is the top of that flag.
Yep.
Draw that in, and then the retracement of that, because this is a red candle, then I can draw that other one right here. And if we want to just kind of zoom in and maybe make it a little easier to draw, like on a half-day chart, I can go ahead and just
so when you're dragging to the top of that red candle, which is that, for me on the daily is the second candle of the flag, right? Or is that which one's the highest on that? Because you're trying to go to the highest point.
Yeah, always looking for the lowest to highest.
Okay, which is right around like 91.50.
Yeah, so we'll go and we'll do it from this is a 195 minute, which is a half day. So we'll go ahead and look and do it.
I'm on a daily. Okay.
No, you're okay to be on that. I was just flipping. I flipped over to this to show you that it doesn't matter. So I'm flipping, and I'm gonna draw it in there. See how it's the exact same retracement.
Right. So I gotta go to the. So is it always the third click to the bottom of that same top candle?
It's not always anything. It's always gonna be the bottom of a move, the top of a move, and then the bottom of that move. Like, pretty much always gonna be using this on a flag, right? So.
Right. So, but you're basing it off of that candle that was the top of the move.
Yes. And so
the bottom of that candle is the bottom of the move.
Yes.
For your third click.
In this instance, yes.
Okay.
That's not always the case.
I gotcha.
And frankly, we could have used this bottom of this wick right here on the 8740. Doesn't, like I said before, it doesn't really matter. It's not an exact science. What matters more is everything else in tandem with everything. You know what I'm saying? You're reading everything, not just the. So anyway, so yeah, okay, that's good. Now I'll keep using this chart. Actually, no, I'm gonna use this one again. Shit. Okay, so can you see my screen again?
Yep.
All right. So now here's the next lesson. Now we've got the daily Fibonacci extension, right? I actually drew this in. So now if we wanted to know, since we're entering in on this flag, right? We would have been getting in here. We don't know any of this is happening. If we want to get in on this flag, we want to look for that breakout of the initial flag formation, and we want to get in on this initial breakout. And especially since this started to curl back up on the TTM squeeze here, this was my initial entry right here when I saw this.
Did you wait for the candle to close, or just for it to break above that line at whatever time during the day?
Pretty sure we got in like around this resistance on the flag. So like where we drew that first dot, or the second dot, I mean. Okay. That's resistance, right? Because that's the high of a move, so that's always going to be resistance.
Right.
And so yeah, we got in like right below this for this initial breakout, and now we've been riding it this whole time.
Okay.
Yeah, and so now when we first got in this trade, I didn't know we were gonna break out like this. I had a good feeling we would do this, right? But I didn't know for sure, and so I measured to see what we would get on a retracement, right? Because I want to see what that is, and that's way simpler. We just draw that from the bottom to the top of a move, and now we know the retracement levels, and I use the 38.2, the 50, and the 61.8. And you can see we drew it in from the bottom to the top, like I said, and look
Right.
exactly where we came. We came back down and scooped underneath, like literally no body of the candle formed in this zone.
Right. Okay.
All of the wicks got held up. That's a really strong signal, right? And so like I see that, and now I'm like, wow, I'm really bullish on this. We got the breakout. You know, if we fall back down, we've got all of that support. There's a shit ton of support there, $89. So yeah, I mean that's kind of the gist of the entry here. And then just zooming in, like let's go back. I can go back to when we entered was this day here. And let's see, it would have got in, I believe it was around VWAP. I can go back and look for sure, but you know, I took the bottom to the top of this move on this red candle that we came in. Like we did the same thing. Look, wicks in the zone.
Yep.
And wicked up. Now we've got higher lows, and so that's just a really bullish sign. We're over the high of days from yesterday. That's a ton of support we've got built in here.
Yep.
And then look, see how I used the retracement there? I used it on a little move. I didn't use it on a big move, right? I just used it on that little move here. And I'll remove this because otherwise it'll get crowded. I can manage having a shit ton of lines because I've done this a lot. I always recommend removing lines so you don't get confused what you're looking at.
Yeah, that makes sense. That way it's not too cluttered.
Yeah, and so, but now that move happened, I mean, I can take this. This is a 15-minute chart. So I can just take the bulk of this whole move here, this whole day, let's just say. Now I got this, see how this retracement came in and it popped up on this daily chart too?
Right.
And now I've got some additional support levels that I can see like more granularly. I can see that we've got support here. We picked up support again. Well, gonna keep holding it basically, you know.
Right.
Now let's just remove this for sake of the lesson here. Now let's look at an extension. Let's remove the after hour trading and look at the move from when we got in. So this is the day we got in here. So this is the day after we got in. You know, I mean, just really, honestly, at this point, like you can just see that it's traveling through that original 1 day Fibonacci levels, just really just grazing through. I mean, I'm not even gonna consider really closing this until we get back below like 94.23 here. You know, I mean, I wouldn't even consider it.
Just because it's been built up so good.
Yeah, and this swings for Friday expiration. We can get one more day out of this before theta really starts to become an issue.
Right.
So we'll let it swing one more day. We've maybe got a little support here at 94. If we can break out at 95, we got support there.
Right.
And so I guess the lesson I want to teach now is just like, so this is 8:30. This is the start of the day here, the initial sell-off of the day. So let's take another Fibonacci extension here on the initial move. So we've got 15-minute candles. First move.
Right.
First retracement here. And when I say retracement, I just mean a pullback, right?
And that's on the 8th, correct?
This is for today, yes. The 8th.
Yes, today. All right. So yeah, we had that big red candle right off the ribs.
Yes. And this is the 15-minute on the right here. I'm going to zoom in. Let's go to the 3-minute here.
So take this.
So if we can hold this high from, this is yesterday's high, I believe. If we can hold this high from yesterday, yeah, this is Monday. Monday is high. And we can hold this high here. There's a good chance we have a continuation because this is an all-time high breakout, right? So looking for just that bounce off of here into the continuation into our Fibonacci's. And these are our new Fibonacci's that we drew in from today, right? From the start.
Right, so basically you're taking it from the 1 day and then now going off of what we have so far, which then, I mean, we just about touched, at least on mine, the 1.61 from, if we're using the first candle today.
Yeah. This is a breakout retest. We just hit all-time highs at 94.94 on Raytheon.
Right.
And, yeah. Yep. And so now we're testing.
Which that was right below. If you would have had if you drew your Fibonacci today at 10:45, then that you would have had your 1.61 almost hit to the penny to the 94.96. Then it got rejected.
Yeah.
Okay. All right, that's making sense.
Yep. Because I mean, what we're doing when we take these measurements, we're just looking at. I mean, the way I've always thought of it is, so the Fibonacci's are the golden ratio. Do you know much about the golden ratio?
No, I've been hearing people talk about the golden pocket and stuff like that.
So the golden ratio is it's a naturally occurring ratio. It's basically it's the equation that all life, including humans and plants and everything, develops. It's this spiral pattern, and it's the golden ratio, and that's what the Fibonacci is based off of. I don't know the exact equation off the top of my head. I believe it's I'm pretty sure it's really simple. It's 1.4 times the last increment. So you start with a little box and you keep multiplying it by 1.4 or something. It's 1.38 or some shit like that. Anyway, what you're seeing in the market and why it works is because the market is a summation of all human psychology and emotion, right? That's right. The market is literally the most crystal ball thing that we have to humankind, and that's why the Fed looks at the markets to determine rate policy for the entire economy, which is the biggest thing in the world. The economy is the world, right? So if you look at the market, the reason that these Fibonacci extensions work is because everybody has the same kind of process that's going on in their mind, and it reflects itself in a naturally occurring pattern on the market. And so these Fibonacci levels are predictive, these extensions are predictive, these retracements are predictive of how humans will react to certain price fluctuations.
Because there's so many of us using the same tool.
Exactly. There's just no way for it not to be a reflection of our entire psychology. And
that makes sense.
Yeah, and one sec, Raytheon's really dumping.
Then when you're looking at those, whether on the daily, because the daily still carries over to the 15-minute, obviously it's not as green, the lines are a little different, but then where are you taking those as, if you're going to, say, you're going to sell into the position, then you're basically looking at the 1.61, the top, for me it's blue, that got rejected almost to the penny today, or just now a little bit ago. So if you were to sell, in mind, you would be knowing that we're going to have some resistance there. So if you're already up in that position and you're I don't care about being in anymore, that's where you would sell right before that, knowing that there's probably going to be a wall.
Yeah, I mean, we just hit a new all-time high. So basically, and it was just because we hit it just from the other day, yesterday, right? So what we're seeing right now is people taking profits from yesterday, right? So they got dumped they got dumped on overnight here, and they're oh, now we've got our chance to get our money.
Now, are they taking the profits, I'm assuming, by using the Fibonacci? Because if they did this at 10:45 this morning, that's where this would have projected to take them.
A lot of people, I wouldn't even say a lot. I guess a lot of people, maybe not proportionate to everybody, but a lot of people use Fibonacci's or different tools. Fibonacci's are a common tool. I personally only use extensions and retracements. I don't actually know how to use any other Fibonacci tools because I've just never needed to learn it. I know there's certain tools that are good for calendar spreads and long-term strategies that I haven't learned yet, and I would like to. But basically, they're all using the same equation to project just market pricing I don't know if all of them work, to be honest, but I know that Fibonacci extensions and retracements are just good for price targeting. You know, they're good for like right now. I drew in, I don't know if you noticed, but I drew in this retracement from the bottom of the day to the high of the day while we were talking, and this is where this zone right here is where I'm looking for a bounce. And you see how it corresponds with the VWAP? See how the VWAP literally travels right through the zone all day? Well, since it's been traveling through the zone, spent a lot of time here. I mean, a breakdown on VWAP could happen. Seriously doubt it though, especially like with all this momentum that we've had that you saw, like, and you see now we're breaking out on all-time highs again. I mean, this is just a natural retracement. This needed to happen. We had a rip from, like, what is this? This is from 92.80. Yeah, I mean, so $2 or $2.20. That's a like 250% move. $2.50. Like, look at it this way. Like, we're up 0.66 on the day, but this was a 2.5% move right here. And like just naturally we're gonna get a pullback. We got one big pullback here on this first breakout, and probably get another one here. See, we're already forming a reversal candle here.
So like, all right, so then that way I got that one down. So then if we're gonna do like right now, for like the QQQ, if looks like we're starting to head back down the other direction. If I'm trying to look and say, okay, well, if I'm gonna enter puts right now, how would we do that showing on the reverse side? It would be the high to low move?
Yes, exactly. It's just flip the exact opposite. So let's pull up a daily. So
like the 15-minute chart.
let's just take it from the daily. We'll take the daily. We'll take the first move here. This is the big move here, right? I want to always start with the big move and work my way down.
Yeah.
So if this bear flag that's formed continues to break down, and see how we broke down right here, and now we're flat.
Right.
We're trading in this support resistance that I have marked in here from a while back.
Right.
Or this is actually from today. Sorry, that's not from a while back. But anyway, so if we broke down off of this support here at like 352, we would have another support here at 340, 341, 335 or so. All this whole area is support, right? Like, you can kind of think of it as a support zone. All of this is support. If we get a breakdown here, we're going to test probably the lows, and then if we get the continued selling that we got, if we get the extension off of this sell-off, we'll get a move down to potentially $300, right?
Right.
So it's just the exact opposite, and we can do it again on the 15 here. Let's go actually the 39 minutes. Let's take this retracement. Or sorry, extension.
You're on the 30 minute, you said?
Yeah, I'm on the 30 minute. This is the 39 minute. I don't know if you're gonna be able to get that. You can get it on. Yeah, you can.
No, you're not.
Well, either way, 30 minute works. I'll just take this move here. So if we were to get a breakdown now, if we don't get over the 360 on QQQ, which kind of looks like it maybe wants to reject a little bit here. I haven't looked at this close enough to me to call anything out, but if this were to reject here, we could see a move down potentially, if we get a really aggressive sell-off to 345, 346.
Right, so and to get that, so on that chart, you basically you got to take the high, so the high being 359. What was that? That was yesterday's. Yeah, so to today, because obviously we started down around 353. We opened.
So I actually took this from Friday. This is Friday's open.
Okay. So.
Yeah, I don't have after hours on this chart. I can put after hours.
Yeah, I think mine are. Well, if I'm on the bigger chart, they don't show anyway. So then.
This is what it looks like with after hour trading.
Yeah.
The chart looks completely different with after hour trading. So.
Yeah. No, I blacked mine out, so I can't see the columns.
Oh, you do? You shouldn't.
No.
No. So here's the difference. This is what I do. I keep it so I know what pre-market trading is. But you can have it. You can make it so that you don't even see the pre-market trading at all. Like you don't even see the price action, right? Like these are two different. These are two different charts. So look at. I know exactly. This is how you have yours right here.
Yeah, basically I just take it to where, I mean, it's in there so I can see it on the time clock if I look right down, but I just don't see those bars because to me it's too many fucking colors.
Yeah, so keep the bars. I'm the same way. You just gotta, honestly, it's so helpful though, knowing where pre-market trading is because price action's so different in pre-market versus like actual trading. So it's important to just be able to distinguish the both, and that's something like you can get lazy, you can get lazy about it and just keep the pre-market trading on there instead of taking it off. I don't know how to do it on.
Oh no, okay, well I got it. All right, so now I have it. So it's I can see the difference, but it doesn't stand out as bad. I made it like a lighter gray where I can still see the distinction, but it's not like these fucking bold ass things.
Yep, a good idea.
Okay, yeah, it should be easier on the eyes.
Yeah. So does that make sense? Did I even here? Let me do one more thing.
If we're inside the 30-minute or the 50-minute, we've done the daily on the QQQ, but if we're gonna go and now do it again on the smaller time frame. Yeah. Say today.
Yeah, let's take it. Let's do it today.
High to low. What are you on the 15-minute?
Yeah, this is the 15-minute on Q. So we're gonna.
All right. So that's
in this case, it's a bullish breakout, right? So we're gonna take from the low to the high on the intraday chart.
Right.
So this is where we could end up on Q today if we continue this breakout. And see how this is still respecting the 9 EMA. I'm not even gonna consider a short position until we break down below this blue line and this blue dot, which is the 9 EMA and the 14 period ATR. And then
so then let's see what you're saying. You're at 360.91 for your first line, right above the today's high.
Yeah, 357.
Okay, so I did that right then. And then technically the bottom of the move is right where our wick is essentially right. The wick ended on the 15-minute candle right now. So that would be the bottom of the most recent from the high.
Yeah, and so what I'll do is if we're actually let me show you a little trick. So if I want to estimate where something might go, but it hasn't finished retracing yet, I can take the low of the day, the recent high, because we know where the high is, right? We just got a rejection off of it, and now I don't know where this is gonna end up, but I can safely assume that if we're gonna stay in this trade, that it's gonna be in between this 14 period ATR and this 9 EMA, right? So I'll just I'll just stick it maybe right on the 14, just to be safe, because then it gives me a lower projection, more conservative projection, right? I'll just put it right there. Now I can get a little bit more conservative projection of where things might go if we hold that 14 period EMA, or 14 period ATR. Sorry, but yeah. So now I've got kind of a better feel, a little bit of a better vibe for where things might go. I've got an idea of where I might want to exit. I might consider exiting after we reject that down right below here if I were in calls, right? But I also might continue to hold for this VWAP support that we have, because you see how it's sloping, everything's kind of sloping up, and that's kind of a good sign that there's a lot of support right in here. You can kind of just see that there's support.
If we fall below 357.47, then we're probably headed back down to much lower before that, because that's pretty much what are those 3 candles of support.
Yeah, so if we curl down below this flag that broke out, so this is a flag. This is kind of a flag, right?
Yeah.
This flag broke out. If we break down below that after this breakout, that's technical damage, right? If things were to break out after that above, it would be impressive for that to happen.
So much strength has to go the other direction.
Yeah, exactly. There's so much that you has to work through. But at this point, we're not going to fight the trend. We're not going to take puts on this because it looks like it's about to break out, right?
Right.
I'm not, and I might not even take calls because I'm still bearish overall. If you look at the daily chart here, we're still in this like gap area. We're still kind of like flat and looks like we
trying to form a flag, maybe.
Yeah, I mean we did. So this is the bear flag, right? So this is like this
okay.
is the.
So but then, because I was looking at it, that it would be forming a bull flag from right where your mouse is now, up, and then for the consolidation.
Yeah, it's forming a bear flag, or sorry, a bull flag on the daily, right? This is a bull. This is kind of a bull flag. We're still underneath this resistance though. You know, this is the resistance we're fighting right now. Is yesterday's close, the sell off from yesterday's close.
Yeah.
And then after that, the 361 is the high of the day from yesterday. So we're still fighting those two barriers.
Okay.
You see, and then see how that all kind of corresponds here if we look at these 4 lines that are on this chart here, or right here.
Boom, boom, boom.
Yeah.
Okay. All right. Well, yeah. Well, at least that helps me understand, because I guess because I was playing around with it, but obviously, if I'm not putting it in the right places, then what I'm playing around with is just not correct. So at least now I can go. It's basically a 3-point drag, and from low to high to the most recent low of that high point.
Yep.
And then obviously just the opposite if I'm bearish on the position, looking for where we might be headed that way.
Yeah, and look how beautiful this turned out. Like look how symmetrical and beautiful this turned out right here. I didn't even try to there was no I didn't try to make these lines perfectly like boom 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 boom. But that's just the beauty of chart
Well, that's what I've started to notice. Like it's funny. I like to now what I do is like on TradingView I'll do weekly, daily, and 1 hour, and just go back and like mark with a certain color for each one. Demand zones or whatever.
Yep.
And like now that I've done them so much that I have so many lines on there, I can start to see like we hit almost to the penny, or super close to the dollar on like Amazon or something like that. So it's starting to click that those predictions per se. Well, I mean, it's not a prediction; it's just copying what was in the past. Seems to come true over and over and over again.
Yep, it's pretty crazy, honestly, and I've always been like really sensitive to patterns. Like I think that's really propelled me in this field, and like it's just still some of the most amazing shit that I've ever seen. Like just charting these charts, and I love it. Really do.
I'm trying to wrap my head around it. It's so intriguing, but
yeah.
Like I was saying earlier, my biggest problem is that I know that I've lost so much over the last 2 years of this fuckery that in my mind I'm like, well, I need to get it back quick. And like I said today, like I've literally let 4 green trades that were like probably between 7 and 11% green go red, waiting for a 20 or 30 or 40% move.
Right.
So
yeah,
but now, like I said, I created OCOs, and now I enter the trade at 10%. I'm out. I don't know. It is what it is.
Right. Well, now you've got this tool. I mean, these Fibonacci extensions and retracements are really, really next level shit, in my opinion, in terms of like just getting a better vibe for like where things might go, and so hopefully that like just kind of eases your anxiety a bit when trading.
Yeah, no, especially when I start to see that they're working out and where it is and where I'm predicting it should go, it actually does. Then it starts to build a little bit more conviction that I'm writing what I'm doing.
Exactly. It's all about like having what you believe that's gonna happen is the most like encouraging thing, right? Like.
Yes.
And so like being able to like actually predict these things is very nice. Like look at RTX, bro. It's literally just going right into my fibs. Like it bounced right off that fib, and now it's going right back in. It's bounced right off the 9 EMA. Like when you find these charts that are just behaving very, very well, like these are humans coming in, scooping this motherfucker up. Like you gotta think of every single candle as a story, in my opinion. And
that makes sense, yeah.
Yeah, and like the story at the start of the day is always institutions trying to fuck with fucking small people. Like they fuck with the people that were trading in the pre-markets that fucking bought this dip, and they're like, oh, look at me, look at us, and then they come in and they sell this initial move because they want to make people feel stupid, because no smart money trades overnight. and then
Right.
they fake everybody out, and then they do this huge fucking move. And like, you know, if you didn't have experience, if you didn't have the perspective of this daily chart, you would have sold. You know, you would have sold the swing this morning that I'm sure a couple of people probably sold, but I've been holding. I'm up 50% on. You know, it's really just about having that predetermined levels, the predetermined thesis, and then if your thesis doesn't work out, you've cut your position. You don't feel bad about it. You look for another position that looks good. You know.
Right. Simple and easy.
Yep. And it's easier said than done. You can always
around with it.
Yeah, man, for sure. I hope this was helpful. And if you have any more questions, like if you want me to run through this again, don't be afraid to ask, because it's not like super simple. I did record this session, so
Okay, good.
I'll try to get my editor to edit it here soon, and then get it up on YouTube.
Sweet.
And you can review it there. So because this is a pretty good session. So.
Perfect. Well, I appreciate it, man. Thank you much. We'll talk soon.
Yeah. Yep. See you soon.
All right, man.
Talk to you soon. Bye.
All right, bye.